We are living in a time when it is difficult to make money on savings. If you've saved some money, that money earns very little right now. A savings account in a bank, though relatively safe, can actually lose money when the effects of inflation are taken into account. And one can only put so much away in an ISA. At the same time, many young businesses are finding it very difficult to raise the money they need for their business. Banks are lending less, and it's always difficult to find new investors. In an effort to bridge that gap, the government has introduced a new tax scheme to lower the risk of investing your money in young, small companies. The scheme is called the Seed Enterprise Investment Scheme, or SEIS. That's not to say that this scheme is for everyone. The fact is that all young businesses have the potential to fail. Thus, you must be prepared to lose your money. The rule is, don't invest what you can't afford to lose. Having said that, SEIS does significantly lower risk. Here's how it works. You can invest as much as £100,000 in any tax year. In return, the government provides upfront income tax relief of up to the value of 50% of the money invested. That takes 50% of the risk away. If the company succeeds and you make a profit on the sale of your shares, then you are exempt from capital gains tax on that profit. If the company fails, you may be able to offset your loss against your income tax. In short, the government is taking a lot of the sting out of an investment that goes wrong and improving the return on an investment that goes right. For example, let's say you invest in your friend's new homemade jam company with £10,000. You get £5,000 back on your income taxes, reducing your exposure by half. If later on the company goes bust, you can offset the other £5,000 against your income tax at whatever rate of tax you pay. Here's an example. A taxpayer has taxable income of £50,000. They would expect to pay about £9,800 income tax on this. If they invested £10,000 through SEIS, they would get £5,000 of tax relief, reducing their income tax liability to about £4,800. There are restrictions on the types of firms that are SEIS eligible. The maximum shareholding you can have in the company is 30%. The company must be unquoted, have fewer than 25 employees, and gross assets of up to a maximum of £200,000 at the point of investment. It must also be undertaking or preparing to undertake a new qualifying trade. Not all trades qualify. And HMRC will also run checks to make sure that a business hasn't just been set up merely to access the relief, and the company can only receive £150,000 under this program. But if you are a young company looking for early capital, or someone with a small amount of money that you would like to put to work, SEIS is undoubtedly one of the most interesting opportunities that has ever arisen.